Welcome to Business Day Television. This is Business Week, a weekly roundup of critical, important economic matters on Business Day Television. As usual, joined at the studio with me is Dr. Adeosun, the chief economist of Business Day, and of course, Lolade Akin-Murele, who is editor of Business Day. Before we get into today's conversation, first, some headlines from around the world. President Bola Tinubu has ordered the immediate withdrawal of all policemen assigned to protecting VIPs in Nigeria. It is estimated that could release close to a third of the total force of the Nigerian police so they can actually face their core mandate. 38 of the worshippers taken from the Christ Apostolic Church in Eruku in Kwara State have regained their freedom. Very good news. On the foreign scene, Israel is reporting that it has killed in Beirut, Lebanon, a Hezbollah chieftain in a midnight attack. Ukrainian and US officials are reporting progress in their negotiation of a controversial plan by Trump, President Donald Trump, that is, to end the war between Ukraine and Russia. Now, let's get on, gentlemen, with our conversation today. There has recently been a string of very positive news, affirmations largely of the reforms being undertaken by Nigeria. All of this is setting up the economy for growth momentum. But my question is, how much of that momentum is now at risk by rising insecurity in Africa's most populous nation? Let's start with you, Olade.
Thank you, sir. Yes, there's so much at risk because we know that the reforms have started to yield positive gains, but there's still a long way to go. What the president has essentially done is stop the bleeding. Nigeria has been bleeding for the better part of 8 years before he took office. He stopped the bleeding, and now we're expecting that we'll start to recover and then see the macro gains translate to positives for the households and businesses. But what we're seeing with rising insecurity now, it means that that momentum might be stopped in its tracks, because truth is the benefit of the reforms is that it's able to incentivize private investment, but that would take a big hit if the insecurity we're seeing continues, because no one would want to invest their capital in an unstable region, an unstable country. So that's a problem we're facing. We're still looking for the reforms to translate, for instance, into job creation. That's not going to happen if you don't have private investment, whether local or foreign direct investment. And obviously, there's enough reason to believe that whenever you have this level of insecurity, private investment typically is spooked, and you don't see that happen. So it's in the interest of Nigeria and the economy that what we're seeing now with the insecurity is really stopped, really, or curbed, to ensure that investment can continue to flow. GDP growth was about 3.9% at the last reading. That is obviously also driven by private investment. So it's important that is solved. And then the gains we're even seeing in inflation as well. There's a risk of that reversing, because if this spate of kidnappings and terrorist attacks that we're seeing continues and then spreads across the northern region of the country, where farming typically takes place, then it means that farmers would not be able to go to their farms for fear of being kidnapped or being attacked by these terrorists, and that would just scoop out the gains that we have made in food inflation recently. So there's a lot at stake here, whether you look at it from the angle of private investment or inflation.
Interesting. Truth is, virtually everywhere I was over the weekend, or in the conversation that I was having with people, the primary topic of conversation was the insecurity. And what this means is that if we're talking so much about it, we expect foreign investors to be talking about it as well. And we expect everybody following Nigeria to be talking about it. Even if you discount the noise from President Trump, that then becomes the subject of conversation rather than the opportunities that are emerging in the Nigerian economy. So, Dr. Adeosun, how bad is this, and should we be worried?
Absolutely. It calls for concern, as citizens and as professionals. The reality is that insecurity leads to a lot of costs. Mm-hmm. Higher logistics, security costs, reduced operating hours, relocation to safer places, delayed projects. The costs are enormous. It's three of our critical engine of growth. It affects our agriculture, like Lolade alluded to. You can't farm, you can't transport the farm. Of course, it will impact in the long term inflation. It impacts on investments. You pay a higher premium when you have a very insecure environment, and it's affecting human capital. Sadly so. Schools are being closed left, right, and center. So this is even a future cost, not even a cost for today. So we are in a serious situation, and we need to take security and peace is as equally as important as economic prosperity. Lolade said the government has been blocking economic leakages. I agree. Key question, sir. Have they been blocking security leakages?
Yeah, I get you. BusinessDay published an editorial today that it captioned "Nigeria cannot lament its way out of terrorism." So very, very apt. I give kudos to the guys who wrote that editorial. And that's all we see. We hear lamentation, we hear regrets. But this is the third year of this administration. And people are beginning to wonder, is it going to fail in dealing with insecurity just like the governments before it? What a pity. Very, very sad indeed. Anyway, so it is important that government does what it has to do. I'm not sure people are convinced as yet that this government is serious. Let's hope that they will be diligent. There isn't any use really seeking power when you get into power and you cannot guarantee safety for the people and for their property. It's just useless.
Of government.
So what's all this talk about 2027?
Yeah.
What do politicians, what do they seek power for? Anyway, we will pivot to another matter, and that relates to the report that credit to the private sector has slowed to 18-month low. So what is driving such fall in credit to private sector at a time when we are so razor focused on growth?
Yeah. So, so the data from the Central Bank of Nigeria shows that credit to the private sector declined to 72.5 trillion. In September, from 75 trillion the prior month. So that's really troubling because typically you would have instances where you complain that the pace of the growth is not fast enough, but this was an outright decline. I think the culprits here are obvious. The high interest rate environment has essentially just discouraged.
So there's a resistance in the market.
There is a resistance, but there's also the fact that banks are also risk averse. The high interest rate environment has not only priced out a lot of corporate lending. What it has done is it's also made investing in government securities very lucrative.
Attractive.
Yeah. So it makes sense for the banks to just park their cash. Yeah, and get without doing anything and get very good returns. So that's it's a factor of those two things that we're seeing. On one side, you have businesses that cannot approach the banks for loans because you're looking at north of 30%, which is quite high, really. How many businesses can you do in Nigeria today that would guarantee that you can pay 30% on just servicing loans without even talking about the cost of running the business and other things. And then on the other end, the banks are just feeding fat on invested in treasury bills and other government securities. So we're seeing essentially the real fruits of a crowding out effect here, where government borrowing is crowding out the private sector. And that's really terrible for growth, because what that then means is that the private sector typically is the engine room of growth, right? They're the ones that create the jobs and drive the economy. So if they're starved of credit, then it means that expansion plans will be put on hold. It also means that they cannot employ as many people as they would want. So it takes a big toll on the economy.
Thank you. We're going to come back to an interesting part of that conversation, which is what the data say about non-performing loan in the banking sector. But let me ask Dr. Adeosun, was this to be expected? Is this an expected outcome, or this is an aberration, a drop in lending to the private sector?
So if you look at the Nigerian context, I won't say it's an aberration. The reason is that somewhat we've become laid back. We practice Snapchat banking. We are looking for the
easy way
out. And banking is such that it's not structured around unlocking value from SMEs, the private sector. It's more of making money for money. And I think that there needs to be a radical review.
Yeah, but isn't that the reason why you have a regulator?
Yes, and so the regulator needs to provide more oversight. So it's one thing for you to
direction,
and then track and request for specific data to show and prove what you are doing. It is very, very challenging for SMEs. The interest rates are very high, and then banks are still relying on traditional means like collateral, when we should be embracing alternative sources of collateral. For example, credit risk analysis, looking at receivables, inventory, and those kind of things. You cannot be insisting on rigid forms of collateral and then use that as an excuse not to support the private sector, the SMEs, and be making more money from Forex and other alternatives. So we need to work around policy. Interesting.
Yeah. Well, already I said earlier that we're going to get to the point about NPLs. What does the latest data say? Is the non-performing loan ratio, is it rising? Is it at the same level? What is causing this significant risk averseness within the Nigerian banks?
No, so the NPL ratio has been flatlining. I think it was 6.9% as of June 2025, and that's pretty close to the CBN's target of 5%. So it's not. I don't think it's a problem.
That's not the issue.
No, that's not the issue. I think it's just like Dr. Adeosun said, the banks just getting comfortable taking advantage
money.
Yeah. So what would typically happen is, if you didn't have the high interest rate environment that you had now, then they will be forced to take on more lending. But the truth is, why take that risk when you can easily lend to the government and make close to 20%? Nowhere, I mean, that's crazy. That's really high. There's nowhere else in the world that the banks can make such a killing from just lending to the government. That's really high. So there's really no incentive to take a lot of risks lending to a small business that you don't know what can happen in terms of their sustainability and cost as well. Policy flip-flops from government could just send the business out of operations, and then the banks is left. The banks are left asking questions. So it's just easier to just put that money in government securities, make a killing. But they also make the point, that's the banks now, that the CRR ratio, the cash reserve requirement, is quite high for them. It's true. Nigeria has one of the highest at about 40%. But the thing is, even at that, perhaps the regulator also needs to look for ways to unlock some of this capital that's just idling away in CRR, earning zero interest. Perhaps if that was brought down, it might incentivize some lending on the banks. But the truth is, if you still continue to have the high interest rate environment, there's no guarantee whatsoever that they will take on new risks when they can easily just lend to government and make a killing.
Yeah.
They are a business after all.
Precisely, they are in a business and they have a duty to create shareholder returns.
And protect the funds of depositors.
And protect depositors' funds as well.
Yeah.
But as you say, Nigeria is often described as a place of many contradictions. We import what we don't need. We export what we need. And here we are at a point where we all are desperate to see the economy grow and grow inclusively. But the major catalyst for growth, which is capital or credit, is withdrawing from going after that growth. Is indeed a pity.
It is, because it makes our businesses very uncompetitive. Because we're talking about the need to boost exports, to encourage our businesses to take on, look at the export market, see what they can export.
Precisely.
But if access to finance is not easily accessible, then there's a problem. Or if it's coming at a very high cost, then it means that they can't compete with their peers.
Let's just, for the two of you, very quickly, one or two things that government or the regulator, the Central Bank of Nigeria, should do just to reverse this and ensure that this does not this does not become a prolonged trend, whereby we continue to see a drop in credit to the private sector. So, Dr. Deoshin, let's start with you. One or two things. What must the fiscal or the CBN do?
The CRR, we should consider reducing it. In addition to that, also along the CRR rate, we should also use the CRR on non-TSA public deposits to restrain wasteful public sector liquidity. And then from a policy perspective, can the CBN, the appropriate committee or subcommittee, try and ask for other details? How many businesses are you providing loans for? How many new businesses, existing businesses? So that it's not just the same of same. Or, we've had instances where banks chase a few HNIs, high network individuals, because, of course, of safety of funds.
Precisely.
But we must begin to give them targets that you must support SMEs, emerging markets, fintech, and so on and so forth.
I get you. Okay, Lolade, of course, we had the crazy regime during the last central bank, whereby different intervention funds were launched, and we're not quite sure how much of that is being recovered. And so that then became a driver of inflation and recklessness for government. So how much of a caution should the central bank have in addressing this problem of falling credit to the private sector?
Yes, so like you rightly said, the intervention programs by the CBN did not really work. It didn't yield the right results. And perhaps, I think that then just made people question whether the central bank should be the one even playing that role in the first place. But I think what is important is there are some policies that we have tried in the past, but I think implementation is now lacking. The loan to deposit ratio, for instance, I think that went a long way at the time to just make banks, you essentially force them to lend. There were also some priority sectors that were identified that the CBN governor then said that, I think it was agriculture and manufacturing, that any bank that lends to these sectors, if you have evidence that you've been lending to these sectors, then your CRR can be reduced.
Free some.
You can free some. So I think we need to be very creative around policies like that, just to push these banks to lend. And essentially, we need to start thinking of how to reduce the interest rate environment. The government is crowding out the private sector. So that needs to be, that's another area to look at.
So the question would then be, for 2 years, we were focused on reducing inflation. We were focused on reducing liquidity. Should the central bank begin to pivot from such single-minded pursuit of reduction of liquidity to getting some liquidity into the system?
Absolutely.
And encouraging growth?
Absolutely.
Especially in critical sectors that we may identify as key drivers of growth.
Absolutely. Whether it's agriculture, manufacturing, real estate now, ICT and the likes. Yeah, absolutely. Because the central bank can also take some succor from the fact that inflation is coming down. So that monetary tightening that we saw in the last 2 years has actually yielded some results. So it's time now to see how you can just ensure that there's more liquidity in the system, which would then essentially boost growth. Because even if we've celebrated the 3.9% growth we saw in the second quarter, we all know that that's still a far cry from
it's quite patchy.
Yeah.
It's concentrated in certain places.
Precisely.
It's not inclusive. All right. Thank you very much. We will bring this first half of our program today to a close and take a very short break. But please don't go away. This is BusinessDay Television, and the program you're watching is Business Week. We'll be right back. We welcome you back to BusinessDay Television. The program you're watching is Business Week, out of Lagos in a very, very warm, bright Monday morning. We will get on straight to the story of financial management and efficiency at the state level. There's a very troubling story, a very troubling trend that suggests that 4 of Nigeria's 36 states have pension arrears that exceed their total revenues. How so mind-boggling is this? First, Lolade, which are these states?
Yeah. So these 4 states are Kaduna, Benue, Adamawa, and Taraba.
And they are all from the north.
Yeah. Now, just for some stats now. So they are combined, the 4 states, their combined arrears exceed 206 billion. And that's versus their total internally generated revenue for 2024 of 127.98 billion.
That's more than twice.
Yeah. So Kaduna is top of the list. 83.3 billion in arrears against 70.7 billion in IGR. Benue, 72.3 billion in pension arrears against IGR of just 20 billion. Adamawa, 27.5 billion in pension arrears versus 20.3 billion revenues. And Taraba, 23.3 billion in pension arrears versus just 16 billion in IGR.
So how bad is this mess?
I think it's just a sign of financial mismanagement, really, and the fact that for some of these states, they are perhaps dealing with an over-bloated civil service. I mean, I think this is a point that we have talked about over and over again, especially even at...
So when we talk about civil service here, we are actually talking about cost of government.
Yeah, exactly. Yeah. So they have more workers than they can cater for. That's just what this means. This practice is not sustainable at all.
Absolutely. You know, it's a governance failure on multiple fronts. It shows years of underfunding the contributory schemes. From a HR perspective or people management perspective, don't forget that you are supposed to pay the pension contribution within 5 or 7 days.
After the month has ended.
Consistent month-on-month, year-on-year defaults. It also shows lack of regulatory oversight. So what's the pension commission doing? Why did they let it get this bad?
Yeah.
You know, again, it also speaks to the fact that when you hear calls for additional state creation, are these states sustainable?
Exactly.
Of the 4, I'm particularly troubled by Kaduna State, because I think they, you know, in addition to like Kano, they have the capability to be able to do more with respect to internally generated revenues. So we need to look at the size of the manpower and then the returns on the manpower. Sometimes I don't agree that the manpower is too much. But are you flogging the manpower to generate returns, to give you value?
What is the value delivered?
But if nobody is tracking attendance at work, if nobody is tracking output, productivity, you know, we say it's government work, you don't need to sweat. So it's this kind of mindset that we really need to then over-reliance on federal funds. Fact, you know, one of the things that helped Lagos, even though I'm not advocating for it, was when the FG, you know, withdrew funds from Tinubu. It forced him to sweat and to think. Can we do something like that for 3 months?
On a national scale, yeah?
On a national scale, you must be able to survive as a subnational without the federal.
Yeah, but you made a point. Nigeria has not been honest in addressing some of these things. At a time when we're seeing major evidence of an over-bloated bureaucracy, some people are raising petition and requests in the National Assembly for the creation of more states. So we are not honest with ourselves. When you talk about state, what is the point creating a state that then ends up with a massive debt that generations to come will not be able to pay? What's the use? But let's get back to this whole question about pension arrears exceeding revenues. Dr. Adeosun, you said this is something that has been accumulated over the years. You've asked a question about what then is the role of the regulator in this. How responsible are these governors? And this is only a measure. In fact, an unlooked measure of how efficient states are being run. The other day we were talking about spending on health, and I mean quality spending on health and education. And we found that most states in Nigeria are just not featuring in the map at all. So I think it's good for the media, and Nice Business Day came out with this story, for the media to begin to look at different aspects of measuring efficiency, government efficiency, not only at the federal level, but also at the state and local government level. But let me come back to this issue. What should the state governors be doing? I mean, the first thing is the media should shame them, but what must they do to get out of this hole?
So again, I think we should focus slightly less on politicking among governors. What would you tell the average young graduates today? Would they aspire to work with Taraba State, knowing that their fathers and mothers are still being owed? So we are saying that the best brains will not be attracted to work for the government or the civil service. We need to look for a way to reverse this trend. Again, we need to also come up with a plan. Is it a 2-year plan, a 3-year plan to pay this? Can we also, there's a way they do it where you say like first line charge. Can we say just like you pay the judiciary? Can we say the pensions of workers should be on the first line charge?
And we're not even sure now whether they all pay the judiciary, but let's assume they do.
Let's assume. The way National Assemblies fight that pay us directly and so on and so forth. I think workers are due of their wages. It's unfair. It's inhuman. And of course, don't forget that we have a huge chunk of pensioners and retirees in the society. If these people don't have money, they are not going to spend. And if they are not spending, it's going to lead to depressed economy.
And part of the things fueling insecurity in Nigeria, when you leave people desperate without their pension, they begin to come up with all manner of things.
To add to what Dr. Adeosun has said, another thing that the state governors should be doing now, beyond just trying to, it's important that they pay up the arrears, but I think it's also a symptom of a bigger problem, which is the fact that their revenues are too low. Why should the state be generating internally generated revenue of just 17 billion?
Which means that some of these states are unsustainable.
Precisely. And then I don't think the state governors are doing enough to just maximize the potential of those states to generate more revenue. I think they've gotten so comfortable just relying on federal allocations. I think they need to step out of their comfort zone to just find ways. I'm sure there's things that these states can come up with that can be attractive to private capital or investors. And then that trickles down to higher tax earnings for the government, which would boost their revenues. So I think they just need to think more like, CEOs of businesses now running these states and just looking at where are the gaps, where are the opportunities that can easily be turned around to generate sufficient revenue for the states. But I don't think enough of that thinking is going. I think they just go to Abuja every other month and then they are satisfied just getting the handouts from the federal government. They go back and they spend.
There could be room, for instance, in mapping assets of the various state governments.
Precisely.
To looking at those that are viable to be sold off
or sold
to the private sector or concession to raise capital to clear some of this debt.
Precisely.
I don't think the state should be allowed to continue to owe the kind of pension arrears that they are carrying at the moment. It is almost like hell for the people who have worked for the government.
I think this is also where I fought the trade unions. This is a more fundamental fight for NLC, TUC than fighting on petrol subsidy. These people pay
petrol subsidy is more emotional, and the labor doesn't want to do the hard work of checking what's happening at the states.
These retirees paid, they contributed to the labor unions for years.
Precisely.
What are you doing for them?
Yeah. I get you. I get you. Anyway, we will now move on to the Monetary Policy Committee of the Central Bank. Will begin its two-day meeting today, or may have started that meeting already. And this is their last meeting for 2025. With inflation numbers coming down consistently over the months, how much prospect of a rate cut is there, Lolade?
I think the prospects are really high. BusinessDay actually undertook a survey of some economists, about 15 of them, and the median was for a 100 basis point cut at this meeting. I think the only person who went for something lower than that, 50 basis points, was Rizia Khan, who's the managing director of Standard Chartered Bank for Africa and the Middle East. And she said that, well, she sees a 50 basis points cut initially, and then another one at the first meeting next year. But most of the people we spoke to tend to believe that there should be a 100 basis points cut this time around. And for reasons very obvious. I mean, inflation is now at around 16.1%. And that's the lowest in quite a while, in 3 years to be precise. So that's good enough. I think that gives enough comfort to the monetary policy makers to say, let's cut rates a little bit. There's also been a lot of pressure, especially from the impact that the high interest rate environment has had on businesses and growth and expansion as well. So I think it's time now to start to see that much needed rate cuts that will just ensure that we're able to kick on from here and deliver even bigger growth numbers.
Dr. Adeosun, I mean, what do you see in terms of prospects for rate cut when the CBN will have its press conference tomorrow?
So I foresee that they will cut the rates maybe to like 100 basis points. But again,
and that will be to what? We are now at what, 24?
26.5.
We are 26.5 now.
Yeah.
So we are looking at that number coming down to 25.5.
Yeah.
But we still need to put some things in perspective that sometimes they may want to be cautious and still retain or go by that 50% rate, because we need to look at a few things. Don't forget that much earlier, we had what we call like a statistical rebasing. And you don't want to be too quick, too soon to bring things down. You want to be sure that whatever you are doing is sustainable. Again, let's look at the food inflation and then connect it with the insecurity. So there are still other variables. You know, this security is okay, but we agree that from a forex perspective, we're also doing better. Lower rates will, of course, translate into cheaper, more abundant credit, and so on and so forth, of course. But most likely they will drop the rates today by the end of this process.
Interesting. And 100 basis points drop would be good and salutary at this point, wouldn't it?
Yes, it will be. It will be. I mean, it's much needed. Truth. I mean, we talked about it earlier. The slowing credit to the private sector is a problem if you really want to have more sustainable growth. I think we've gone now from the phase where we're just trying to do our best to curb inflation. I think it's showing some positive signs now, although there are always risks on the horizon, like Dr. Adeosun mentioned, with this insecurity now. It could just throw a spanner in the works. But I feel like it wouldn't be surprising if we saw 100 basis points cut at this meeting.
How quickly, just looking at what has happened in the past, how quickly does these cuts transmit through the system and become effective interest rate for borrowers?
Yeah, the bigger the better. If you see 100 basis points cut, I mean, it's actually immediate. You see that it does impact borrowing costs almost immediately. But the truth is, if you're going for a business, if you're going from 35% to 34%, it's not significant enough, and that's why they would always clamor for even a bigger or a bumper rate cut that really makes it affordable.
Shakes
precisely,
the system.
yeah, precisely. Otherwise, it's still pretty much in the same territory for them. They will still feel priced out of the credit markets.
You know, I mean, I sometimes sympathize with the central bank. Sometimes I believe they are too cautious, but given the crazy height that we attained with inflation, I see a need to be cautious. But I'm asking myself, what is the greater evil now? Is the greater evil inflation or threat of inflation, or is the greater evil the failure to grow the economy and to bring succor to our people?
Sustainable succor.
Yeah. Yeah, but I mean, the trend around the world, well, let's even talk about Africa now, is that rates are coming down, inflation is slowing down as well. So
globally.
So I mean, it's only the right thing to do for the central bank at this point, given that our inflation rate is also on the decline. But of course, like you said, sir, you know, they're still probably being reminded by the scary heights that we attained when you're talking about inflation in the past, that they just want to be very cautious. But the truth is, businesses can't wait for that. A lot of the economy can't wait for that.
Some business would have died by the time.
Exactly. So we need to act fast.
Interesting. Anyway, I had promised as we started that we're going to close by just looking at Africa's external debt map. And I hope our people can put up that illustration which we got courtesy of our friend. What surprised you guys here on a country by country basis? Which are the surprising things in this map?
So
the highest seem to be South Africa at 179, is it?
And Egypt.
And Egypt.
I'm sure the average Nigerian would have expected Nigeria to be the highest.
Yes.
These are the biggest.
We're not the giants of Africa, after all.
Yes.
That's what this
That's
means.
what that says.
We're not, and it's. I think. I mean, South Africa has the largest.
So the size of your debt, is that also, does that translate to the size of your economy as well?
Yeah, because it's South Africa in first place, Egypt in second place. Although Morocco looks like third here.
Yeah.
And then
I'm not surprised about Morocco, given the great work they are doing in their economy, whether it's auto manufacturing that has taken off in Morocco.
So the critical thing here is that.
Is this comfort for us in Nigeria then?
I wouldn't say it is. It may also show lack of ambition.
Yeah.
And, it also says that and not you also need to look at, despite the fact that we are not in top 3 debt, from a stress perspective, it feels like we're heavily indebted.
Yeah. So that's about managing the debt, or what
if you look at debt to revenue.
Debt to revenue.
So there's a lot of pressure. I mean, if we're to replicate this chart for debt to revenue, it will look a lot different.
Nigeria will probably be at the top.
Yeah. But this is just debt to GDP, and we have a very small GDP size. So
and not to even talk about a more worrying trend. We borrow, they don't tell us what they are borrowing for. So we can't judge the efficacy of the borrowing.
Precisely.
I think for me that's probably my greatest concern.
Yeah.
They just borrow, they want to fill the funding gap in the budget. Yeah. But that's not a good way to borrow.
Certainly not.
I think Nigeria should stop this rot and begin to borrow for specific projects.
Precisely. We need that discipline to just, to have project-tied borrowing. So for every dollar, especially when it's external debt, because we don't earn sufficient dollars as it stands now. Mm-hmm. So for every debt in dollar that you're taking, it should be clear in the minds of everyone, including the average Nigerian, that this is the project that we're taking this loan to finance, and this is the multiplier effect it will have on the economy, both on a short-term basis and long-term basis. And that's the discipline that these other countries bring to bear when they go out to take on external debt, and their GDP is showing the results of that. That's why South Africa, I said, has the largest GDP. But even if they have the largest size of external debt, they have the largest GDP to show for it. So it tells you that some of the debt they've taken has gone into infrastructure that has boosted their economy, and that's how come.
And they even have deeper capital markets.
Exactly.
I recall a visit to South Africa soon after we rebased the economy and became the largest economy. And I was discussing with my South African friends, and they said to me, Frank, hey, you guys are now the bigger economy in Africa. That's fine for you. But ours, the South African economy, is a more developed economy in Africa.
Yeah.
And that really, it hit me like a bullet in my heart,
It's most industrialized.
And so there is a way that countries develop.
Yeah.
countries develop by just a general reform of the system, creating efficiency. But some countries develop by building projects. For instance, Nigeria says now that they want to borrow to build power generating capacity to take to raise capacity by about 10,000 megawatts. You can make a point like that.
Yeah.
You can build the plant.
Yeah.
You will be sure you would generate the revenue to pay back.
Exactly. So
You
it will
know?
definitely rub off on the economy for sure.
Or you want to borrow to build world-class hospitals.
Yeah.
You can make a
capital.
case around that, and you can find creditors willing
to
to support that kind of thing. But as I said earlier, Nigeria just borrows, and ultimately it looks like what we do is just borrow to pay salaries.
Exactly.
During Buhari's period, it was borrowing to pay for petrol subsidy.
Yeah.
Very reckless way of
Consumption
contracting debt for a nation with low revenues like Nigeria.
Yeah. If we're not borrowing to build railways to nowhere, we're borrowing to pay subsidies that are consumption based, they're not productive, they don't grow your economy in any way. It's quite a shame.
Anyway, we're going to bring our conversation today to a close. We have been very expansive in the issues that we have discussed today. We looked at Nigeria's growth momentum and the risk that it faces from rising insecurity. We then, of course, examined the fall in credit to the private sector, which is at an 18-month low. We thought it's worrying and believe that the central bank needs to begin to look at how to promote more growth. We then, of course, examined the more troubling issue of how 4 states in Nigeria have accumulated pension arrears that far exceed their revenues. In fact, in some cases, doubling their revenues. It's like just, bringing in people, some of their best people to work for them, and they are leaving them to die in penury. We then looked at the prospect for a rate cut, given that the Central Bank of Nigeria's Monetary Policy Committee will be starting its final meeting for the year today. Hopefully, tomorrow we will be getting news about the outcome of that meeting. We all are expecting, many economists indeed are expecting, that there will be a significant rate cut when that meeting concludes tomorrow. And then we closed with something that is both comforting and worrying, which is Africa's external debt map. Nigeria doesn't feature in the top 3, but some of us are asking the question, because Nigeria is not there, is that comforting? Does that show how poorly we're doing? But perhaps more importantly, while many of these countries are borrowing to build projects, Nigeria is borrowing to fund consumption, or borrowing to plug revenue gaps in the budget, and we don't know exactly. The executive doesn't say why it is borrowing, and the legislature is so inept, so unintelligent to even demand from the executive that it must specify the reason for which it is borrowing, because it's the only way that you can measure it. What you cannot identify, you cannot measure. So whereas Nigeria is not among the top 3 in Africa in terms of external debt, the trend we see in the country is still indeed very worrying. We will close at this point. We hope you have enjoyed our 7th today of Business Week. We'll see you on Monday. Bye-bye.